What's going on, guys? My name is Richard Moglen and welcome to another video. So for this week, we're going to be highlighting TDOC or Teledoc Health Incorporated, which provides on-demand healthcare services over the internet. And we're going to be going through the Marketsmith chart, and this is a sponsored video by Marketsmith. And then I'll actually head into TC2000 and talk about my ongoing trade with this stock. So everything from my entry setup, what I was doing at the time of the purchase, my initial stop loss, and then my risk management going forward. And overall, TDOC has been one of the strongest stocks out there right now. If you take a look at the daily guppy chart, and this is a 65-minute, you can barely tell that we had a 30% correction. So very strong price action, really shook off all that market negativity, and it seems like it's heading up towards all-time highs once again. So this immediately caught my eye because of that RS that it was showing, and that RS rating is a 99, and that RS line is right near all-time highs. And overall, the fundamentals are decent. They're not the best. It isn't profitable at this point, but that sales growth is pretty steady. So it's making some headway there. And taking a look at the EPS rating, it's a 36, which shows you something about the earnings. But what I really liked was that group RS rating. And I've talked about this a couple times. In this type of market, I'm looking for the best stocks in the best groups. A good example of that is all the semiconductor stocks, AMD, Nvidia, iFi. Those are all doing fantastic because they're moving as a group. And if you can find the best stocks in the best groups, those are going to be big winners. So I really like overall this is A+. That SMR rating is a C. Accumulation distribution is a B-, which is pretty good in this market. And that composite rating is a 94. So overall, it's better than 94% of stocks in the IBD database. So that's all pretty decent. I would like to see that it's actually showing some earnings. That's one big negative for the stock. But for me, at the end of the day, price action tells you about what institutions are doing. And right here, they're showing that they're not selling during this huge correction. And that tells you something about their kind of faith in this company. And taking a look at actually the funds, you can see that it's a steady increasing trend, which is great to see. And overall, you've got a good amount of funds investing in TDOC, which is great to see. And taking a look at the industry and sector, you can see year to date, they're up almost 14%. And overall, its RS rating in the group is 1 out of 21, which is very good. So overall, fundamentals are decent. As I said, I would like to see earnings in this stock. Okay, so on the weekly chart, we've got a little bit more fundamental data here. And you can see the top RS in the group. SLP has been doing very well. Vive has been doing very well. And what I really focused on was these big sales percent change numbers. That's very good growth, and that shows you that in the future, the company has the potential to become profitable because it's getting more and more customers each and every year. So that's great to see. And I also like that the up-down volume is a 1.2. That shows you that overall more people are buying the stock than are selling the stock. So buyers are in control. And other than that, we've already talked about these ratings. So now let's go ahead and head into TC2000 and talk about my trade. So first things first, when I'm analyzing a stock, I like to head over to a weekly chart or even a monthly chart and check out that overall trend. And TDOC fits exactly what I like to see. Ever since its IPO price, it's really been increasing in value. It had a nice consolidation after its IPO, a green line breakout, a big increase, another green line, and then now it's broken through that green line once again and is moving up once more. And it's shown that it's capable of doubling, and you can see that after this first green line breakout, it increased over 100%. That's great to see. And now it's on another uptrend, and it's up 67% on that uptrend. So that's great. That's exactly the pattern that I like to see. And if you're curious about how to trade IPOs, I've been checking out this book right here, The Life Cycle Trade, and they present a lot of great research about how to trade these IPOs, especially after this first big consolidation. So it's just interesting to read and get some new perspectives. And they present a lot of interesting tips, and I highly recommend that book. But yeah, once I've decided that's in an overall uptrend, I head over to a daily chart and check out its recent price action. And ideally what I'd like to see is a nice long base, tightening up in volatility and also volume constriction. And you can see that TDOC doesn't really have any of those things. So why did I buy this stock? Why did I put it on my watch list in the first place? Well, you can see, or actually you can see that we were in a big correction right here, and TDOC barely moved. And if you check out the daily guppy chart, as I showed earlier, it hasn't broken that uptrend yet, which signifies that's a really strong stock. And if you only buy stocks that are in a red, white, blue uptrend, you'll do very well. So going back to the daily chart, I put it on my watch list after I saw that really good relative strength. And then I looked for an entry point, and I saw this nice consolidation right here that wasn't too deep. And I looked for an opportunity to use either a green dot setup or a blue dot setup. And I actually bought this stock on the 14th using a green dot indicator setup. And if you're not familiar with what a green dot is, it's basically a 10-4 stochastic cross where the red line is the 10-4 and the blue line is the signal line, which is a 4-period moving average of that line. So it basically just shows a momentum increase towards the upside. Okay, so let's talk about my actual trade, my stop losses, and how I'm gonna go forward with managing my risk. So on my actual entry, I noticed that we had gapped up on that day, and I didn't want to chase the gap up. This was on my radar, but I didn't want to chase it upwards and have it just fall all the way back. So in the first 45 minutes of trading, it gapped up, fell down, and then it started moving back upwards. And that's when I bought my shares when it was increasing on above average volume. So this is an interesting way to trade gap ups. You want to wait for that drop if it happens, and then buy it when it approaches that open price. So that's exactly what I did. And I got in at 156.13, and I set my stop loss at 4% below that price at 149.90. And since then it followed through on above average volume the next day on the 15th, and it increased about 9% on that day. So I had a good cushion going forward. And today it's showing very constructive price action. Even though it gapped down, it has almost gone green for the day. So this is a great thing to see. An inside bar where you gap down and recover basically all the losses. So for risk management, I've moved up my stop now to 156.13, and I'll continue to backstop and increase that backstop as the stock increases in price. And my plan going forward is to keep hold of those shares until we break that red, white, blue uptrend. And that would signal to me that the short-term uptrend is over. And one more thing with this guppy chart, you can see the price action was so strong here that it didn't even fall to its 200-day moving average, which a lot of great growth stocks did. So to me, that was one more signal that this could be a true market leader. Okay, so now that we've talked about how I'm handling this trade, let's head on over to the Teledoc website. All right, so here is the Teledoc website. And as I mentioned, they are basically a company that offers healthcare services through the internet. So they seem very well primed to benefit from the current situation. Though as we saw from the chart, they had been doing very, very well even before this crisis happened. So they can only really benefit from this. And checking out their website, they have a bunch of different software, apps that you can basically use to monitor and chat with doctors without the need to head over to a hospital and interact in person. So in my point of view, this offers several benefits. The first being that you don't have to risk exposure of yourself or others, depending on what you have or what other people may have at the hospital. And the second thing that really strikes me is that this just seems like a better arrangement overall. It seems more convenient. You can kind of receive service 24/7, and also it seems better uses of really the doctor's time, as they can quickly check up on your diagnosis and let you know through the internet. And they have doctors across all 50 states. I think about 3,000 doctors are incorporated into Teledoc. And from what I've seen on this website, it seems like it's easy to use, easy to sign up. And in my point of view, as I said, seems like it's going to become more and more relevant. So overall, that is kind of my take on Teledoc. As I said, I do own this stock currently and plan to hold shares as long as that trend holds. I hope you guys found this video useful, and if you did, please remember to leave a like down below. I would really appreciate it. But other than that, thanks so much for watching, and I'll see you guys in future videos.